Hello viewers, welcome to today's session. In today's session, we will discuss banking and financial awareness through MCQ based with concept explanation. And if you're new to our channel, we welcome you to subscribe for more updates. So let's get started. First question is, which of the following is an objective of fiscal policy in India? The correct answer is option D, all of the above. Here, fiscal policy in India aims to achieve multiple objectives, including controlling inflation, promote economic growth, and achieving social justice. Next question. What is the impact of government increasing spending on the economy? Correct answer is option C. It can lead to both inflation and growth. Increasing government spending can inject money into the economy, which can stimulate growth. However, if spending is not financed properly, it can lead to inflation. Next question. How does government use tax policy as a fiscal policy? Correct answer is option C. Both option A and option B are correct. Here, fiscal policy uses tax rates to influence aggregate demand. The government can raise taxes to reduce demand and control inflation, or decreases taxes to boost demand and promote growth. Next question. What is the difference between fiscal policy and monetary policy? Correct answer is option D. Both option A and B are correct. Here, fiscal policy focuses on government spending and taxes controlled by the government, while monetary policy focuses on interest rates and money supply controlled by the central bank. However, both policy works together to achieve economic goals like growth, price stability, and full employment. Next question. Which of the following is monetary policy in India? Correct answer is option D, all of the above. Here, the Reserve Bank of India (RBI) uses various tools to implement monetary policy, including repo rate, open market operations, and CRR. Next question. How does increasing repo rate affect the economy? Correct answer is option B. It decreases inflation. Here, increasing or hike the repo rate by the RBI makes it costlier for banks to borrow from the RBI, and this discourages lending and reduces money supply in the economy, which helps control inflation. Next question. What is the impact of open market operation on interest rates? Correct answer is option D. Buying government securities decreases interest rates. By buying government securities, the RBI injects money into the economy, which tends to push down interest rates. Conversely, selling government securities reduces money supply, leading to highest interest rates. Next question. What are the negative impacts of inflation? The correct answer is option D. Both option B and option C are correct. Here, inflation can erode the purchasing power of consumers, as their money can buy fewer goods and services. It can also create uncertainty for business when planning for the future. Next question. A country has a trade surplus if... Correct answer is if the value of its exports exceeds its imports. Here, a trade surplus occurs when a country exports more than its imports. This means more foreign currency is flowing into the country compared to what's flowing out. Next question. How might the RBI respond to address currency devaluation in India? Correct answer is by raising interest rates to attract foreign investment. Here, the RBI can use various tools to influence the exchange rate. Raising interest rates can make rupee-denominated assets more attractive to foreign investors, potentially increasing demand for the rupees and halting devaluation. Next question. Which was the first bank established in India? The correct answer is option B, Bank of Hindustan. Next question, which bank product allows customers to earn and higher interest rates by giving a higher minimum balance? The correct answer is option B, Premium Saving Saving Account. Here, Premium Saving Account. These accounts often come with higher minimum balance requirements and offer higher interest rates compared to basic savings accounts. Basic saving accounts. These accounts typically have low or no minimum balance requirements and offer lower interest rates. Next question, what type of loan is typically used by business to finance inventory and operations in the short term? Correct answer is option C, Working Capital Loan. Here, this type of loan is designed to meet a business short-term financial needs, including inventory purchases and ongoing operational costs. On the other hand, personal loans are for individual use and not for financing business operations. Home loans are specifically for purchasing and residence, and education loans are intended to finance educational expenses. Next question, which type of account typically offers the highest interest rates among saving products? Correct answer is option C, Fixed Deposit Account. Here, fixed deposit account typically offers the highest interest rates among saving products. By locking your money in for a predetermined period, usually ranging from a few weeks to several years, fixed deposit offers guaranteed interest rates that are generally higher than what savings accounts provide. Next question, which service allows customers to make payments directly from their bank account to another party's bank's account electronically? Correct answer is option C, Electronic Funds Transfer. Here, mobile banking and internet banking are simply methods to access your bank account electronically. They can be used to initiate EFTs, but EFTs itself is the underlying service that facilitates transfer between accounts. An electronic fund transfer is a broad term encompassing various methods for electronically transferring funds from one bank account to another. Mobile and internet banking often use EFT as the underlying mechanism for these transfers. Next question, the Reserve Bank of India, RBI, was established in which year? And the correct answer is option A, in the year 1935. The Reserve Bank of India, RBI, began operations on April 1, 1935 under the RBI Act 1934 in Calcutta. Next question, what does CRR stand for in banking terminology? The correct answer is option B, Cash Reserve Ratio. Here, CRR refers to the percentage of bank's total deposit that must be kept in reserve in the form of liquid cash. So CRR stands for Cash Reserve Ratio. It's a monetary policy tool used by the central bank to regulate the money supply in the economy. Next question, the main functions of regional rural bank RRBs is to. The correct answer is option B, is to serve the rural areas. Here, RRBs were established specifically to bridge the gap in financial services available in rural and underbanked regions of India. Their focus is on providing credit and financial facilities to underprivileged sections in rural areas, including small and marginal farmers, agricultural laborers, artisans, and small entrepreneurs. While they may have branches in some urban areas, their core mission is rural development. Next question, which act governs the functioning of commercial banks in India? And the correct answer is option A, Banking Regulation Act 1949. Here, the Banking Regulation Act 1949 provides a framework for the regulations and supervisions of commercial banks in India. The Reserve Bank of India Act 1934 establishes the RBI and outlines its powers and functions as the Central Bank of India. It doesn't directly govern commercial banks, but the RBI plays a crucial role in supervising and regulating them under the Banking Regulation Act. Next question, scheduled banks in India are listed under which schedule of the RBI Act 1934? The correct answer is option B, second schedule. Scheduled banks are listed in the second schedule of the Reserve Bank of India Act 1934. And this schedule specifies the banks that meet the RBI's criteria to be considered an scheduled bank and become eligible for certain privileges and regulations. Next question, what is the main objective of the statutory liquidity ratio, SLR? Correct answer is all of the above. That is, to control the expansion of bank credit, to manage inflation, to ensure the solvency of banks. Here, SLR is used to control the expansions of bank credit, manage inflation, and ensure the solvency of banks by requiring them to maintain a certain percentage of their deposits in the form of liquid assets. Here, control the expansions of bank credit means by maintaining banks to hold a specific portion of their deposits as liquid assets. The SLR limits the funds available for lending. This can help regulate inflation by preventing excessive money circulations in the economy. Next question, which entity regulates and supervises cooperative banks in India? The correct answer is RBI and NABARD, option B. In India, cooperative banks are subject to a dual regulatory system. This means there are two main entities involved in regulating and supervising them, RBI and NABARD. One is Reserve Bank of India. After instances of financial irregularities in cooperative banks, including the BMC Bank scam in 2019, all urban cooperative banks and multi-state cooperative banks came under the direct control of the RBI in 2020. And the RBI issues license, prescribes regulations and conduct inspections for these banks. And NABARD still plays a role in cooperative bank, particularly for state cooperative bank and district central cooperative bank. It conducts statutory inspections and provides guidance on these banks. Therefore, while the RBI plays a more prominent role now, both option A and both RBI and NABARD are involved in regulating and supervising cooperative banks in India, depending on the type of cooperative bank. Next question, what is the role of the National Bank for Agriculture and Rural Development, NABARD? And the correct answer is option B, provide refinance to rural bank. Here, NABARD provides refinance support to rural banks and institutions to promote agriculture and rural development. Here are some of its key functions are providing refinance. NABARD provides loans to cooperative banks, regional rural banks, and other financial institutions to support lending in rural areas and promote rural development, supervisory role, and promotional and development activities. Next question, which committee is associated with the reforms in the Indian banking sector? The correct answer is option A, Narasimhan Committee. The Narasimhan Committee is associated with the banking sector reforms in India, recommending measures for financial stability and efficiency. Next question, which of the following is a primary functions of commercial banks? Correct answer is option B, accepting deposit. Here, accepting deposits from the public is a primary function of commercial banks. And here is why the other options are not primary functions, because issuing government bonds, this is the responsibility of the government or its appointed agencies. And regulating the stock market, this is the Security and Exchange Board of India is the primary regulator of the stock market in India. And printing currency, this is the RBI has the sole authority to print currency in India. Next question, which bank is known as the Banker's Bank? Correct answer is option B, Reserve Bank of India. The RBI is referred to as the Banker's Bank because it regulates and supervises other banks in India. It provides them with various services, including holding their cash reserve ratio (CRR), lending them short-term funds, providing clearance and settlement services, and acting as a lender of last resort. In times of financial crisis, the RBI can provide emergency liquidity assistance to banks to prevent them from collapsing. Next question, which term describes the minimum capital reserves that banks must hold against their risk-weighted assets? The correct answer is option C, capital adequacy ratio. Here the capital adequacy ratio, CAR, is the minimum capital that banks must hold against their risk-weighted assets to ensure financial stability. Capital adequacy ratio is a crucial measure that ensures banks have sufficient capital to absorb potential losses from loan defaults or other financial risks. And the higher the risk weight of an asset, the more capital a bank needs to hold against it. And this helps to maintain the stability of the banking system and protects depositors' money. Next question, which of the following committees is associated with the recommendations on micro, small, and medium enterprises, MSMEs? Correct answer is option C, NAYAC Committee. The NAYAC Committee made recommendations on the credit needs of MSME sector in India. The NAYAC Committee formed in 1991 was tasked with examining the issues faced by micro, small, and medium enterprises in India. The committee's recommendations primarily focused on improving the availability of credit to MSMEs. It suggested that banks should ensure that at least 20% of their total credit is provided to the MSME sector, recognizing the crucial role these enterprises play in the economy. Next question, the public sector banks in India were nationalized in which 2 years? The correct answer is option C, in the year 1969 and 1980. Public sector banks in India were nationalized in 2 phases. First phase is in 1969. The second phase is in 1980. The first phase of nationalizations of public sector banks in India occurred in 1969 when 14 major commercial banks were taken over by the government. And this was followed by a second phase in 1980, during which 6 more banks were nationalized. Next question, the term NBA stands for? Correct answer is non-performing assets, option A. Here, NBA stands for non-performing assets in the banking sectors. It refers to loan or advances made by banks that are not generating income for the lender due to overdue payments from the borrower. In the banking sector, an asset becomes non-performing when it ceases to generate income for the lender. And this typically happens when the borrower fails to make the interest or principal payments for a specified period, usually 90 days or more. Next question, the concept of lead bank scheme was introduced in which year? Correct answer is option D, in the year 1969. The lead bank scheme was introduced in India in the year 1969. It aimed to ensure financial inclusion and provide banking services in rural areas. The lead bank scheme was introduced by the Reserve Bank of India, RBI, in 1969. The scheme aimed to ensure that every district in the country would be served by a designated bank that would act as the lead bank for the district. The lead bank is responsible for coordinating the efforts of all banks and financial institutions operating in the district to ensure adequate banking services, especially in rural and underserved areas. Next question. Which committee's recommendations led to the formation of regional rural bank? Correct answer is option B, Narasimhan Committee. Here, the regional rural bank in India were established based on the recommendations of the Narasimhan Committee, also known as the Narasimhan Working Group on Rural Credit in 1975. And the committee suggested the establishment of RRBs to provide credit and other financial services to the rural population, particularly small and marginal farmers, agricultural laborers, and rural artisans. Next question, which banking initiatives aims to cover all households with banking facilities and is also known as the People's Money Scheme? Correct answer is option C, Pradhan Mantri Jan Dhan Yojana (PMJY). And this is a financial inclusion program that aims to provide every household in India with access to a bank account. It's also known as the People's Money Scheme. Launched by the Government of India in August 2014, it aims to provide affordable access to financial services such as banks, accounts, credit, insurance, and pensions to all households in the country. So thank you for watching the videos. See you in the next session.